Disty. Ni hao ma. Good morning. It's 8 o'clock in the morning. 8 a.m. Do we have any sound? Yeah, I think so. Hey, it's a Tuesday, but it feels like a Monday. Huh? Hope you enjoyed your long weekend. Welcome to September, prime time. How was my holiday yesterday? Well, I did a swing trading group on Sunday, so that was pretty good. Played with some toys in the backyard. That was good too. So anyways, welcome to a new week. I propose that we start by going through the calendar, looking at event risks, also going over the news that has occurred since Friday. If you want to talk about non-farm payrolls, we can also do that. But without further ado, let's get on with it. Let's go. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. It is always smart to stay humble, to trade small, focus on the long term, never risk money you cannot afford to lose. Cool. Hey, good morning. So we got a shortened trading week. That's good. We got some event risk coming up, so we'll cover that. Not a lot of news today, so that's good. So sometimes that leads to nice, clean trading. Sometimes it just leads to no trading at all. Also, one of the things that you may be watching is the yield on the 10-year T-note for guidance on how or what the impact of non-farm payrolls was. And so therefore, maybe you're trying to carry that strategy out. So there's a lot we can talk about today, a lot going on later this week. And then we're getting closer and closer to that SEP Fed meeting. So very cool. So thank you for being here. Thank you for your positive energy. Thank you for being a subscriber. I hope these webinars help. That is the raison d'etre. I want to teach you how to use both technical and fundamental analysis to create trade plans. Conservative, disciplined, repeatable trade plans. This is the only get rich slow YouTube stream. So that I preach to teach. Cool. Hey, you're a trader. You're going to need a broker. That's just how it works. You need someone to execute your trades and put them into the interbanking system. Hey, many traders don't even do that. Many traders, if not most traders, trade against you because they think you're going to lose all your money and they don't really give a damn. So they trade against you. It's called B-booking in the industry. Well, Trader's Way actually enters their trades into the interbanking system. I've seen that through my own personal experience. That's how they earned my loyalty and respect. Yes, their execution speed is fast, and I'm the one that found that out through third-party testing. Their spreads are very competitive. They actually pay you full swaps, and they have world-class customer service. So that's how they earned my loyalty and respect. So if you visit tradersway.com this morning and fill out the form for a demo account, it's in the bottom right-hand corner, then hopefully over time, they'll earn your loyalty and respect as well. And when you're ready to trade real money, you'll already have a trusted execution partner for your successful Forex trading business. Tradersway.com. So here we are. Okay. TT says, Wayne, last Friday you said the 10-year T-note may drop because of a delay in taper. Yes. You have to be specific, though. When you say something like a drop in 10-year, it doesn't mean anything. Price or yield? So I thought with a poor showing in non-farm payrolls, a possible outcome of that is that traders can continue front-running the Fed raising price and dropping yield. And I guess we can start with that. So how did the market respond to non-farm payrolls? So let's do this. 10-year bond yield. Okay. And that's not it. We'll do this one. And it's 1.36. Cool. Okay, how do I change this? So over the course of a month, you can see even with non-farm payrolls, yields are rising. Now that is my long-term fundamental strategy or play or not plan, but thesis, I guess thesis, right? That yields are going to rise. Now with non-farm payrolls, these yields could fall, and if they did fall, that would show dollar strength. But after, post non-farm payrolls, yields continue to go up, which means people do believe the Fed's going to taper. They've told us they'll probably taper this year. But also, what does it tell you? Well, you have to make a choice on where you put your money. And right now, it seem to be thinking that the better place to invest is in the stock market and real estate versus the bond market. So that's really interesting because people are making these decisions like, yeah, it's okay now, but in a couple of months it's over, so why even bother? So that's good. And so this fits my investment thesis of I want to sell US dollar, and under a situation or under conditions in where this yield is rising, that fits my long-term vision. So that's really cool. Okay. But it could have gone the other way because of non-farm payrolls. So the more interesting thing is it didn't, despite non-farm payrolls. Okay. Diago says, Wayne, will the day trading group start this week? No. I need some time to put that together. I believe I said the 15th to the 15th of Dece. Okay. All right, so let's get on with this. So while you were barbecuing, while you were hanging out with friends and family, stuff was happening around the world. In particular, I want to highlight a couple of things. Okay. Chinese trade balance. They thought 45.5 B. What? 58 billion. They were wrong. They, meaning analysts, were wrong by 13 billion. Now, 13 billion over 45, that's a big mistake. Makes you wonder what analysts do all day. Okay. So it was 57, and now it's 58, almost, right? 58 and a third. That's going up, Bubba. Trade balance. Now, is it imports or is it exports? Okay. Well, if it's exports going up, check this out. They thought 16. We got 25 and a half. Holy smokes. So China's exporting where? The United States and Europe. That's good. Okay, that's good. And look at up very significantly. Chinese exports are, despite traffic jams at the ports, despite the Delta variant slowing the economy down, boom, China did export a lot. Okay, and they imported a lot. Okay. Makes you wonder what they imported. 10-year T-note? Were they the ones that dropped the interest rate so low? Maybe. Maida said, yeah, that was the date I talked about. Yeah, SEP 15 to Dece 15. Just gives me time to set it all up. I have to move things around in my life to make that work. But anyways. Okay. So anyways, huge, huh? What do you guys think of that? That's impressive, isn't it? Okay. So, what do you think? Remember, this is part of your thesis. Is this a sign of global economic expansion? Okay. Well, that's showing money is crossing the border. China's making money and China's spending money. They might be buying U.S. treasuries. They might be buying Australian iron ore and coal, so on and so forth. Johnny's like, hey, El Salvador's launching their Bitcoin currency today, their legal tender. I'm much more interested. I mean, yeah, that's I don't spend a lot of time thinking about El Salvador. Let's just put it that way. I'm sure the people of El Salvador are wonderful, beautiful people. But I'm more interested in what will happen now that unemployment benefits have not been extended and that you must pay your rent now as well. Okay? And that's in the United States. So suddenly the free money has been cut off and you actually have to pay your rent. So that'll be very interesting. So we'll see how that played out. By the way, with non-farm payrolls, 275 to 280,000, whatever it was. Remember, that's for August. I don't know how much hiring gets done in August. If you didn't start working at a restaurant or a bar or hotel back in June or July, I mean, like, why would you suddenly sign up in August? But, and then of course, the Delta variant was a pretty big deal, right? So really, I'm more interested in the September number, which doesn't come out until October. And I don't even know if that's going to get or capture the cut in unemployment benefits. So, the real numbers aren't going to come out till really October and November. And by then you should already have made most of your money. So once again, these economic releases are just data points. I believe your job as an economist is to look at the trend and extrapolate forward. And you need to make a decision now. And you may be wrong that you won't lose a lot of money because that's what technical analysis is about. But you should still have an investment thesis. And if it's expansion, you're going to say, look, all right, all the bartenders were hired, okay, in July. Now, let me give you an example in case you didn't do the homework. Let me tell you about my homework. So breaking down non-farm payrolls, I found a lot of very interesting information. So in the subcategory of hospitality, okay, there's all kinds of sub components, okay? There's things like food and bev, so let's just call that restaurants and bars. Okay, there's hospitality. Etc., etc. So hotels, bars, restaurants. Okay? Okay? Food and bev. Okay? That's a lot. Well, I guess I wrote hospitality twice. We'll put hotels, whatever. Let's redo this, okay? All right. All right, cool. So let me preface this, why it has importance to me. Because during the time that this information was gathered to do non-farm payrolls, I was in a tourist town of Florida. Every single restaurant and every single hotel was packed with people, packed with tourists. And they were desperately, desperately, desperately short of people. Workers. Desperately, I'm telling you, begging. Every single restaurant, every single bar, every single hotel in a tourist town. And I'm sure every single t-shirt shop and all that kind of stuff, right? Every convenience store, probably fishermen and boat rentals, and like literally every single business was desperate to hire people. Okay. Then I went to Chicago. Same thing. Then I went to Wisconsin. Same thing. The hotel staff at my hotel was scrambling to keep things going. Okay? And I've been to New York. It's a fair amount of travel, huh? Same thing. Lots of help wanted signs. Okay. With all this in mind, how many jobs were added in hospitality in the August NFP? Every hotel, every restaurant, every bar across all of America, the southern border, the northern border, 2 major cities, and of course I know Atlanta. So 3 major cities, Atlanta, okay, 3 major cities, and tourist area on the northern border, tourist area on the southern border. So, right? How many jobs were created in August? Think about all the ads and the advertising and the help wanted signs. How many jobs were added in the month of August in the hospitality subcomponent of non-farm payrolls? Is anyone going to guess? Hello? How many? Well, it can't be 300. There was only 275 jobs added total. So it has to be less than 300, Johnny. Yeah, type in a question mark if you don't know. Again, think about it. You could walk into any restaurant in America. You don't even need experience. You don't even need experience. They'll hire you right now. Every single restaurant, every single bar, every single hotel will hire you today. Just walk in. No experience required. You ready for this? Zero. None. Nada. Now, what happened, like when you look at the subcomponent, there's more than food and bev and hotel. There's a bunch in the subcomponent. But what happened is some added, some lost, and this category added 0. They all offset each other. But if you think about it, every hotel, every restaurant, every bar, millions of businesses will hire you right on the spot today. You just have to show up and ask. They'll get you to do something. You can work in the kitchen. You can work the front desk. You can clean. You can park cars. You can clean windows. You can be the pool guy. Like, nobody cares. There's something you can do. Just show up. They'll hire you. And 0 jobs. 0. You don't even have to know how to spell 0. 0. Oh my God. Okay. Now, people in my swing group know these other things, so please don't answer. But what percentage of jobs went to women? Okay. Now notice women should be approximately 50% of the entire population, right? So of the new jobs, right, in NFP, what percentage of the jobs went to women? The answer might be startling, but 10%. %90 of the jobs went to men. If you're black, despite the unemployment rate going down, the unemployment rate went up. The amount of black men with jobs went down. Crazy stats. Crazy. Now, Marina's like, no surprise. Yeah. And I think it's a bit of a fallacy to try to guess why, because we have our biases. And I think it's dangerous without actually doing research. But, you know, you might guess, for example, well, there's a child care shortage in the United States. Okay, you know, so it's tough for women. I don't know if people are saying, well, we're desperate for, you know, restaurant staff, but hey, man, don't hire any women. I mean, I don't think that's going on. Also, you might say, well, it's racism that black men aren't getting jobs. Well, it could be a contributing factor, but without actual research, we don't know. Maybe maybe black men are not taking the jobs. I don't know, right? So, but the stat is the stat. But be careful trying to answer why. That takes much different research. But the unemployment rate went down for all of America, but it went up for African Americans. Okay. So anyways, interesting. Okay. All right. So anyways, this is good import-export data of China. China's red hot right now. The United States is red hot. Maybe Europe is coming online. Let's take a look. Okay. Eurozone GDP quarter over quarter. Whoa. We expected a negative number and we came in 2.2. Whoa. Okay. So Europe is red hot right now. Do you think that helped China? Well, we see there's probably a correlation. Europe was way more productive than expected. And therefore, China exported significantly more stuff than expected. Maybe much of that stuff went to the Eurozone. So congratulations, Europe. And with high oil prices, you might actually be getting some inflation. Congratulations, ECB. Okay. Okay. Year over year, Eurozone GDP, again, a beat. Okay. A drop in sentiment by Germans. That's why I don't pay attention to sentiment. Okay. But remember, when I see a low number like this, 26.5, it explains why European car lots have BMWs and Mercedes sitting around doing nothing because, you know, let's say Germans don't feel comfortable buying a new car. In America, we don't have any new cars. They're all gone. Okay. Mohammed, this is not the time for me to coach you one-on-one on your fundamental analysis, but join the swing trading group and I can spend more time with you there because we can talk about it as a group. Okay. All right, cool. Now, going out to Japan, that's going to be interesting. That'll be in our Asian session. Okay. So that's good. Okay. Maybe a surprise there. Surprise upside on GDP? Maybe, right? All right, now we're getting serious here. Now we're getting serious into the week. Bank of Canada interest rate decision. If you think Canada's doing better than expected, maybe starting today you're trading CAD. And maybe you can go into the CAD interest rate decision at break even with a trade already on. Just a thought? Or you wait for it to come out and then trade. The Fed Beige Book, this is an interesting read. You get wonderful bonus points if you actually read the Fed's Beige Book. At the Fed meeting, at the FOMC meeting, I should say, in a couple of weeks, they're going to read the Green Book, the Beige Book, and the Blue Book. The Beige Book is the only one that's released publicly. And it'll give you an idea of how each Fed president stationed around the United States feel about their localized sub-economy. And you can get a picture of the information that the Fed voters are likely to vote. So if you see that, I don't know if this is true or not, but let's say the Detroit Fed president is a voting member. I have to look that up. I don't know if that's true. But let's just say if the Detroit Fed president is a voting member of the FOMC and that president's localized economy around Detroit is like a depression, well, then that president is going to be very dovish. Okay? Meanwhile, if the president of the San Francisco Fed is a voting member of the FOMC, they might actually be significantly more hawkish. They still might be a dove, but they'll be, less dovish and closer to a hawk, or actually straight up hawkish. And so you can start kind of trying to figure out how the Fed is going to make their decision. But you'd get that through reading the Beige Book. Okay? Now, on Wednesday's Asian session, which is Thursday in Asia, CPI out of China. So that could be really nice. That would be real nice. Okay? Fuel for the fire, man. Fuel for the fire. So I'm looking forward to that. And then Thursday, the biggest day of the week. ECB interest rate decision. Okay? Remember, right? So far, the data looks really good out of Europe. And remember, they're trying to create inflation. They've been spending money like crazy to create inflation. Of course, they haven't been successful at that. However, oil prices are up, gold prices are up, wheat prices are up, that kind of stuff. And that might actually give the Eurozone inflation. Now, I've been arguing all this time that they didn't need to spend all that money, that they should have just bought oil and pushed it up and created inflation. But anyways, despite the policies at the ECB, there's now inflationary pressures and a really red hot summer for productivity. Can you imagine? Europeans working in the summer? Europe was productive in the summer? Oh my gosh, that's amazing. So anyways, that's really good news. Okay. And then Friday is an easy day. Cool. Nice. So that's our week. Looks pretty good, huh? Boop, 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 boop. Okay. There's your demo account, man. Get your demo on. Okay. All right. What do we want to do? Let's start with the indices. Okay. And Pete's like, hey, be careful. Oh, well. Like in Texas, they're like, Texas is a whole different country, right? Don't mess with Texas. That's how I feel about Holland, right? When I'm talking about Europe, I'm not talking about Holland. Holland is, right, the Netherlands, for crying out loud. That's a whole, right? I separate that. Boom. Right? So what I always say, Peter, is, Germany bailed out Ireland Italy, Spain, Greece. And then the Dutch bailed out the Germans. So anyways, yeah. All right. So anyways, pig down, odd down, Europe up. Whoa, what? Whoa, look at that. Okay, mixed bag with yen and strong dollar. Doesn't surprise me. Didn't make any trades yesterday. Haven't made any trades today. Nervous about potential dollar strength, and I'm trying to really. I want it to show like legit strength that will last. Or if it's just strong for a little bit, then I'm going to, crack that rock. But it didn't surprise me to see strength. I wasn't aggressive yet, although I taught in the swing trading group how to be aggressive, but also recognize when you're wrong so you can just hit the kill switch hard and fast and then aggressively wait. Right? Aggressively wait for the trend to continue. But either way, this dollar strength is normal, I would say, this time of year, so based on seasonality. But I don't think it's big yet. So we can go through. I think I put some plan A and plan B trades down in the swing trading group. And again, we met on Sunday. Okay. By the way, if you're already in my swing trading group, okay, you're already a member of FX Bootcamp and you've done all the training courses, and then you upgraded your account so that we can meet once a week to set up trade plans for 100 to 300 pips each, and we do all our group work. It's a really, really good meeting every Thursday, right? That membership is $99 a month. We meet once a week. Now, if you're in that group, I'm starting sort of a super duper. I just had this meditation idea over the weekend while I was thinking about ways I can help you. And because this is such an important time of the year for trading, I'm creating a new sort of elite group inside of the swing trading group. And we're going to meet every single day, Sunday through Friday, setting up day trades for our swing positions. Essentially, I don't want you to miss this giant move. So we'll meet every single day. And that's, even though that's, 4 times the amount of meetings, that's an additional fee. But not much. Right? It's $300 for 3 months. That's it. There's nothing after, there's nothing before, but for 3 months, we'll meet every single trading day. Sundays included. Sunday, Monday, Tuesday, Wednesday, Thursday, and Friday. Okay? But only if you're already in my swing trading group, which then assumes you've already joined FX Bootcamp, watched all the training videos. I've asked everyone that's interested in joining that to go back and redo the day trading course as well as the swing trading course. But I want your fourth quarter to be your best trading of the year, unless the fourth quarter doesn't produce anything, which might be true too, because I can't push the market. I can't create the beta, but our alpha is to know when to be aggressive inside the market beta and then when to hit the kill switch. Okay. Okay. If you're trying to figure out the math, that's $200 a month to meet every day. And I didn't mention, we'll meet in Asia, and it's not every day, it's actually twice a day. I'm going to do a quick Asian session and then what I call a late Asian session. And then I'll do an early Asian session, which is really the New York close. So for those that are in Europe and they're trying to get a day trade on by front running, we'll be able to potentially catch that in the late afternoon. Well, but you have to be in the swing trading group too. So if you add it all up, it's 200, right? But all right, so let me say this. So we're going to meet at the New York close or just before the New York close at 3 p.m. Eastern time. And that's for the Europeans to get their analysis together, look at the market, maybe do some front running before they go to bed. And then we're going to meet again at 9 o'clock Eastern time. And that we're going to be there for the Shanghai Open. Okay, so it's actually twice a day. So I suppose that's 800% more than the swing trading group, but it's the same price, right? So anyways. Whew. Okay, so there you go. So if you like that, you got to join FX Bootcamp first. That's going to cost some money. And then you have to upgrade your account to have access to the swing trading group. Great, that's going to cost you money. And then I will figure out a way for you to then upgrade your account one more time so that you can do day trading and swing trading. Okay, and that will cost you money. So if you got no money, you got no car, you got no woman, and there you are. But I don't think that's a lot of money, but maybe that's just me. All right, let's trade around the world. And okay, check it out, check it out, check it out. Support, support, support. Resistance, 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 resistance. Okay, now we got this inside move here, this inside support. It's moderate. Okay, but maybe if we're climbing up. By the way, this is WTI. I don't know why the watermark's not there. Okay. Okay. Looks like we're stuck on 70. Okay. So what do you think? I think this is statistically relevant. Okay. Or if you want to, let's use a different tool. We can go insert, indicators, custom, price action pivots. Okay. And you can see that's even more statistically relevant. Okay. And if this is going to turn, it's going to turn here. It's going to hit this now, come back, hit this, and then break. So as a bull, that's what I would be looking for if I were me. Okay. Mohammed, bonds and stocks will move together? No. But why is that existing now? Somebody besides the market is buying bonds. I wonder who that is. Okay. Abdul says, for 3 months payment, in one payment or $300 a month? No, $300 total. I want you to commit to the 3 months. If I have to give up a couple of hours every day, if I have to sit down on my charts at 9 o'clock at night and I have to be sober, you need to pay me money. Now, I'm going to be doing my work anyways. But nonetheless, if I have to commit to being around, because sometimes the Asian session takes me 12 minutes and I'm done. So if I have to sit around for an hour and a half explaining things, it's going to cost money, right? And then same thing, if I'm going to not be golfing, like it could be New York. If I'm going to be here at 3, I could be golfing. I could be working in my yard. I could be playing with my children. Instead, I will be working with the European traders on setting up front run day trades. So that's going to cost money, but I need the commitment of, right? So we're basically saying the fourth quarter, you're going to be there as much as possible for 3 months. Okay. So I need you to commit for the 3 months. So instead of $99 a month, you're just going to have to pay $300. Therefore, I know you care enough to be there every day, and I'm not giving up. Because, here's the terrible thing. Let's say I make the commitment and like 5 people show up and I got to sit around for 5 people, and it's the same amount of time, right? I'm like, dude, I could be doing something more productive with my time if only 5 people care. I'm like, right? So I need to know people are committed and that there's a reasonable amount of people to make it worth the effort and the sacrifice, right? So I just thought a lot of people would find it very helpful. That's all. But if nobody finds it helpful, then boom, don't worry about it. I'll work 12 minutes, and then I'll pop open a bottle of red wine, and I'll sit and watch girl fails on Fail Army. Yeah. Okay. Okay. A couple of questions here about analyzing the Aussie dollar from yesterday and all that kind of stuff. Yesterday was a holiday in the United States, and I didn't work, I didn't trade, I didn't do anything. Okay. Cool. All right. Let's look at gold. Okay. Gold, plan A and plan B down here. Typically, what I would have done is been a buyer here. But as mentioned, because banks were closed, because of a holiday, I didn't trade it, right? Now, you could have, okay? You could have bought it here or here, for example, and it took you out and you had a small loss. That's okay. Okay, that's okay. If you traded it and took a loss, that's okay. It's totally okay. Now you got to kind of ask yourself how worrisome this truly is. Is this a stopper as a bull? Does this stop you? Does this put the brakes on until you maybe breach back through here? Well, that's one of the major things you need to be deciding. Look, trading is easy. Knowing when not to trade, okay, and actually not trading is the much more difficult part of being a trader. Okay? And not trading is one of the keys to success. Meaning, okay, if you have a bad trade, typically you'll follow it up with 3 bad trades, right? So knowing when to hit the kill switch and not give those two extra losers, for example, over a long period of time makes a huge difference. Okay, there was a magazine article I wrote many years ago. It was over 10 years ago because I know it was at the other house. So more than 10 years ago, I wrote an article for a magazine, and I said the difference between a great trader and a good trader is a great trader makes one less trade. It's not more trades. It's not better trades. It's not more money per trade. It's one less trade. And over a long period of time, you'll find that a great trader will work probably 20% less hours and probably make 20 or 30% more money. Simply because they got 5 easy trades in a row and they skipped the 6th. Why did they skip the 6th? Whatever reason, their analysis told them it was time to take profit and take a walk, and they skipped the pullback. Or in this case, you can have one loss, okay, for example, and you might even have 2 losses where you're like, okay, you buy this and then it drops down here. So now you take your second loss, but that hits a kill switch to you now where you had a pretty reasonable one here and then a pretty reasonable one here. And now you have 2 lower lows and no higher highs. And you say, oh, well, this isn't bullish anymore. And you walk. And you might have to wait a day. You might have to wait 17 days before you get a higher high, higher low, and you start re-entering as a bull again. Versus a less experienced trader, let's say a good trader, but not a great trader, a good trader might take 3 losses or 5 losses before they hit the kill switch. Okay? But you'll see, right? So if you make, let's say, 33 pips here, 33 pips here, 33 pips here, and then you take a negative 33 pip on this last trade, okay? Statistically, that's a lot. Okay? Okay? You worked an extra hour, made one extra trade. That one trade didn't work, which, offset another hour or two worth of work. So you worked at least 3 more hours than somebody else, and you only got 66 pips. Where if you were just sort of clever enough, know when to walk away, you might have worked an hour less, okay, and made 33 pips more. Now, statistically, and especially over long periods of time, you might find that you worked 300 hours less. Because you didn't sit around, let's say almost every day, pissing around here, looking for the last trade. Or I guess it's this one, right? The negative 33. So you give that up. How many people would like an extra 33? How many people would like an extra 300 hours where you could watch TV, you could walk your dog, you could spend time with your children? Yeah, right? And how would you like to also make 33% more money because you didn't work so many hours, right? So anyways, there's a thought there like, this is an okay loss. If you did this, that's a good trade. I want you to realize that. Okay, never put yourself in a situation where you feel ashamed about your losses. Okay? You took a shot. Okay? Reggie Jackson, one of the greatest hitters of all time in baseball, has the all-time record for strikeouts. But nobody talks about that. They talk about the home runs he hit. Reggie Jackson has more strikeouts than any person to ever play professional baseball ever in the big leagues in the United States. Ever. In 100 years, nobody has struck out more than Reggie Jackson. But he's a well-respected player. And he's in the Hall of Fame. He wasn't afraid to try hard. Okay? So if you're trying hard here and you took this, that's a great trade. Maybe the bank holiday, maybe this, maybe that, maybe seasonality. But look, dude, that's a good trade. Now that you're down here, now you got a real decision. Do you try one more time off the old plan A, or have you hit the kill switch now already? Okay? That's what I want you to be thinking about. Okay? Right? So Muhammad, ask yourself, if normally when the stock market rises, why is it that bonds fall? Okay? Think about the flow of capital. Stock market's up 20% this year, and you can earn 1% investing into bonds. Now you say, well, that's an inflationary period maybe, right? So what's going on? Who's buying the stock market? Yeah, so then, if the stock market's up 20%, why did the bond market rally instead of fall? Who's buying? It's not just 120 billion a month in buying that normally doesn't exist. It's the effect that the 120 billion has and how other people can make money. Okay? So ask yourself, what do you think should happen when the stocks are up? Should bonds fall? And if they're not, why not? And then when will that why not change so that this will be normal? Okay? You should be able to do some research and some thought, and you should be able to figure that out. All right. And Biddy. All right. So the meme traders are going to buy Bitcoin. I think it's today, aren't they? In 2 hours? 3 hours, something like that? Does anybody know? The Reddit guys? Okay, so nobody knows. All right, well, pay attention. Okay, pay attention. Right? If you use Reddit, maybe do your research. I don't know. That's not for me, but whatever. Wall Street Bets, correct. All right, so let's look at yen. Let's do yen. Okay. I bought a lot of, or sold a lot of yen and bought a lot of things against yen last week. As you guys know, I exited in exit zones last week because of non-farm payrolls. I was in this one at least twice, maybe 3 times. And I'm out now. And look, this was an okay trade. And it even worked out for a little bit. But what happened? We got hung up on resistance. So when I see that, I go, OMG, not because it's R1, but because it's September R1. And now I instantly worried about S1. So that's kind of why I got out here. And now this has happened. And we are in a situation, at least on the hourly chart. Now we have a lower low, but I'm a bull. I don't like lower lows. I like higher lows. Okay? Why do full retracements happen? Here's how I describe it now. Okay? The Forex market is a dance. Okay? Between bulls and bears. And bulls and bears work together. They dance together. When your left foot moves forward, their right foot moves back. Now, if you don't know how to dance, you're going to step on toes and you're going to get pushed around the dance floor and you're going to ruin it for everybody. This is a delicate dance. For example, bears had sold this hard for weeks until we got here. Does anybody know the counter trend target? Well, let's just say everybody in the swing trade groups know. Anyway, so back down in here, which is, by the way, the 3rd week of August. I know, right? We hit the exact projected low for the month of August. That's what we assumed on August 1st. Look at that. It hit it. It stopped. Okay. And then on that day, especially with the 1, 2, 3, we're expecting this price of 81.5. Okay. Which is right here. So it went to 82 and stopped. Now, isn't that what's supposed to happen? Yes. That's actually what's supposed to happen. Okay? We talked about this in March. And then in March, I said, don't be shocked if this has a big downward move at the beginning of September. Can anybody back me up and confirm that that's what we talked about in March? That August would be down until the third week, and then the third week would rally up, and then the beginning of September could have a very large decline. It may even break your spirit, but if you anticipate it, it won't. How many people can confirm that that kind of precision you're learning in the live groups? Precision. In March, we're talking about specific weeks of up and down. Okay. Yeah, pretty neat, huh? So if you don't know, what are you going to do about it? You going to join or not? You knew in March, you knew in April, you knew in May, you knew in June, you knew in July, you certainly knew in August. And I'm right. And here I am in the swing trading group telling people, you know what, I'm taking profit here because I'm worried about this exit zone for bulls. I'm worried about non-farm payrolls, and I see the monthly R1, which could be very statistically important. So your choice now is, do you buy this dip and hope it goes up? Or, right, and be willing to, right? And then when's your kill switch? Are you going to try again here? This is a buy zone too. So what we talked about on Sunday, guys, is you can kick it off the 21, or you could kick it off here. But at some point, should you be trying again down here? You know what? Probably not. Oh, but it could be a Fibonacci retracement. That's your call, my friend. Your call. At what point will you just let it happen? The way I look at things is that there's no first mover advantage. I always heard this thing called first mover advantage, in particular with high-tech startups. And then later on, I became an investor, not just the entrepreneur. I became the investor and found out there's no such thing as a first mover advantage. There's a thing called a second mover advantage, where some dumb venture capitalist or desperate venture capitalist threw a whole bunch of money at a really good idea, but it was a premature idea. It was an unflushed out, untested idea. The technology might be ripper awesome, but then nobody knows about it. They don't even know they have a problem, yet alone that you have a solution to the problem that they don't know they have. So not only do you have something better that no one else has ever seen before, but nobody knows that they need it. So now you have to educate the whole market, which is just another form of saying money, 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 time, time, time. And then someone else figures out what you're doing. And they're like, oh my God, look at that. But you might have some design flaws just because you started from scratch and you made some basic assumptions. Time has gone by and some of your assumptions weren't wrong. And now your competitor's saying, all right, I see what they're doing. And now I can see that some of the market's starting to realize how awesome their thing is, but it's not perfect. And we can build something that does it better. And they just start right off the bat. They're like, okay, we'll make something like that, but we'll do it this other way. And then we'll contact customers and they're already interested. So we'll sell them something they already want to buy. And our pitch will be, it's kind of like that other stuff, but it's way better over here. Okay? Okay? You see? So you can go in and you're like, it's kind of like Ethereum, but more like Bitcoin, but it can have the smart contracts that Ethereum has, but it's way more secure. It's also faster because it's faster. It uses less energy. It's more secure and it can be used for much more things. So it's secure like Bitcoin, but it's flexible. It's like Ethereum with smart contracts, but it's faster and it's cheaper and more scalable. And you're like, oh my God, what do you call this? We call it Cardano. Well, how are you so smart? Well, I was part of the Ethereum guys. And then I said, wait, there's a problem here. It's not scalable. The smart contract's a great idea, but it's not scalable the way that you're doing you're right. So no. I want to create something different. And that's all of a sudden you got something better. It can do what Bitcoin can do, but it's scalable. It can do what Ethereum can do, but it's scalable. And the security is super high. So you should go with us. And it's a good sales pitch. Okay? So, put it one way, I guess, Bitcoin's great, but Ethereum's better. Ethereum's great, but Cardano's better. Okay? So there's very rarely a first mover advantage. The thing with Bitcoin, just a little sidetrack, the reason it worked so well is it only can act as money or try to replicate what money does. It doesn't do anything else. Okay? You can build a game on Ethereum. You build apps on Ethereum. Okay? So anyway, so Cardano's come out and it's even better. Good. Very rarely a first mover advantage. So, you don't have to be the first one in. If I'm not making sense here, what is this first mover? Like, what am I trying to say? You don't have to buy this. Because you could say, well, if that doesn't work, we're going to come down here and maybe you can buy that. Sure. So why do you want to be in the middle here? Right? The most conservative part here is, see, like, you don't have to be the first one in this move. Because you know that move is going to look something like this. So why don't you wait for that? Okay? This is your in, not that. Because you're going to wait for this down move to be challenged. Because we know the down move is probably going to look like this. And then that's probably going to look like this. And so the next bullish move is down here. So couldn't you wait for something that looks like no. Okay? Some form of that where on a smaller time frame now, you're a buyer of okay? And you're long here. Not the first move, the second move. Okay? Something like that. I didn't read I saw two headlines on that, Lewis, but I didn't read it. Okay? And then Russell's like, and then Solana is even better. Okay, right? There's always, right? But the thing is, the first one is rarely the best. Right? Okay. So you carry that out with everything. Now, they're not all going to look like the Aussie because some are going to be stronger than others. But you most likely will see similarities. Trying to get that. Anyways, guess I'll have to do it this way. Okay. So I do want to see us go above 87, 88. Okay. I want to see us go above there. Do I have to buy it today? I can, or I could see this as a low. So it depends on how you have your support. And then you can wait. You can wait. Okay. So again, one of the things we talked about in the Sunday swing when we were here, it wasn't this pair. I think I said I'm not interested in CAD. But one of the things you could have done is a little Asia fade here, expecting a higher high, which means you might be approaching a loss right now. So what? Can't feel ashamed about that. You took a shot. You bought it at support. Okay? You feel bad about a loss? You got a problem. It's not going to be helpful if every trade that doesn't work out is an emotional disaster for you. Take the shot. You're open. Take the shot. Oh, but what if? Okay, yeah, there's a lot of what ifs here. Okay, there's a lot of what ifs here. What if he blocks me? Dude, you're open. It's worse to not take the shot than for it to not go in the basket or not go in the net. Take the shot. Okay, you're a professional. Take the shot. Okay? Now, I gave the swing trading group very specific rules of engagement in which they can take the shot without much negative consequence. They have permission to engage. Well, Matrix, I didn't say anything about losing. Okay? Also, it's not like you get one shot per game. It's worth 100 points if you make it. It's worth 0 if you lose. And you only get one shot, right? Like, to take lots of shots, but be open. Don't be stupid. I never said be stupid, right? Get the ball as close you can to the net, and when your defender is on their back heels, take the shot. Right? I hate it when they shoot from like 6 feet behind the 3-point line. Like, what? How do you get to the pros when you're that stupid? Pass the frickin' ball. Okay, so anyways, are you still a bull? Well, right, you have to break things down into digestible pieces. This is the zone in which I want to buy, okay, for the week. Okay, so if my day trade was buy here, now I have a bearish day trade, I can wait until it turns bullish and then grab these. Okay, so you try this one and it fails. Okay, you skip this one. You could do this one, but you skip it. And then you buy this one and it works. And then you buy this one and it works. And you buy this one and it works. It's all good. It's just when you don't know what you're doing. And I don't mean because you don't have the education. I mean you don't have a strategy. When you don't know if you're a bull or a bear, you're going to get whooped. Okay? You're going to get whooped. Because bears know exactly what price they want to sell. Bulls know exactly what price they want to buy. And if you're not committed to one or the other, you're just never going to know what to do. You're going to fall for anything. You're going to get whooped, man. So there's euro going here. Let's do pound just because I got a trade on here and I forget what the training was. This might have been one just doing the OCO and see the auto stop's not working. So one of the things to do here is you pull this out and you go okay. Never in jeopardy. I can see what we had done here now. I said you could buy it at the swing and your stop's here. Now it should be down here really, but that's typically if you buy it closer to that. But whatever, you can afford to be in this trade because when you look at this, just for you newer folks, what you want, it's very clear, and we knew this last week, that this, if you're a bull, this is your buy zone. It's a little low for what you would want, but it doesn't matter. It's still there. So the idea is, do you buy it at this first one or do you buy it at the second one? Well, if you buy it and you plan your risk right, you actually incorporate both inside the one plan. So you buy it here and you can survive the pullback to this. Okay, that's most ideal. Now, if you needed to have this down here and you're like, well, that's 66 pips, well, then do 5 micros instead of 1 mini. Cut your lot size in half. It's the same risk. Okay. I mean, dude, you have to be very wrong to lose 66 pips. I mean, you weren't even close. John says, in theory, you don't need the education if you understand the strategy. But and here's the thing with that. You don't know when to change the strategy because you don't have the education. Okay? Or if you're going to raise money from investors, you'll sit down there and it'll be very clear you don't know what you're talking about. And that's a very rarely a successful move in raising money, to sound like you don't know what you're talking about. Right? So, so I wouldn't recommend that. So anyways, surviving this, okay? And this is still comfortable. And maybe, just maybe, it rises. Here's the next thing. Right now, the probability on the short run is this. In that case, I will lose 33 pips. So should I jam my stop? No. Why not? Because this is meaningless. I can afford it many times over. So my job isn't to worry about losing 33 pips. Like, oh my God, what if this comes back and knocks me out? I should jam my stop. I bet you anything you've tested this probably 1,000 times where you jam your stop here quickly and you get knocked out. That's not what I'm trying to do. If I have a clear trading strategy, and I don't mean the techniques, that's tactics. But if I clearly believe this is going up and that this whole area is a buy zone, then it's working. I don't need to jam my stop. It's working. I understand the risk. I'm willing to give up 33 because if I'm right, I'm easily going to make 99. Easy. In fact, I rarely go for 99, especially on pound yen. That would be embarrassing. My mother would yell at me if I only made 99 pips on that trade. So I'm like, 33? For sure. I'm just happy I'm still in it. This is going to work out. This is great. Okay. It's when you're trading out of fear that you're going to make a lot of mistakes. You're going to get out of good trades early because you're so worried about getting this to break even. Okay. You're going to get out of trades early. You're going to say, oh my God, I got 50 pips here and I'm give me my 50 pips. And now you're out. You have small wins. You have small losses. And then, of course, if you're really worried on things like winning percentage, every once in a while, you'll take a big loss. So you have tiny wins, tiny losses, and every once in a while, a big loss. And trust me, nobody's interested in your trading. Nobody is interested in all of that. It's terrible because you're afraid and you're making the wrong decisions. If you take the shot, you're supposed to get paid. Do you understand? So if you look at the risk reward ratio. So right now I'm doing a 1 to 3 or 3 to 1. Okay, whatever. I'm going to get paid 3 for every 1 I risk. Okay. So I calculated this and I'm good with it. Now, if we're up here, I might move it. Okay. Because I got the higher high, so the next thing's higher low, and then the next higher high, okay? But you got to be in it to win it. And you got to stay in it to win it. Well, it's not the knowledge matrix because I've seen it over the decades I've been doing this. Even traders with knowledge still make mistakes, and the biggest mistake is not doing it. Okay? The biggest mistake I see from traders that know what they're doing is that they don't do it. By far. Now, some traders come in, they're brand new, and they don't know jack about anything. They just suck across the board. Oh, you fix that. But I've seen it where traders that have the knowledge and reasonable enough skills, they watch it happen, but they don't do it. Okay? And that's the biggest thing, and that's what I'm trying to address here. So I'm trying to say, like, yeah, this came down, but it's tolerable. We can tolerate that risk. And it's back at break even, but why would you care about that? You took the trade so you can break even? What kind of attitude is that? You took the drawdown and now you want out of break even? You took the pain for no reward. Like, what kind of mental position are you in to take the full maximum pain you can tolerate on this trade and then decide not to get paid for it? You've already paid the penalty. Why don't you collect the reward? Shoot, why don't you go for 300 now instead of 99? I mean, you already took the worst of the pain. You took the whipping. Okay? Gee whiz. You got to get paid. When you're right, you got to be right. You got to be very right. Okay? Well, there's a difference between patience and not acting. Okay? Sitting under the cork tree, smelling the flowers doesn't mean you're patient. Okay? John says, hey, what I need to learn to understand is how to create your type of technical and fundamental. See, I don't have my type. Okay, I don't have my type. There's nothing unique or special about what I do. So I don't want you to think that way, John, of like, how do I get sort of Wayne's thing? I don't do anything special. I understand technical analysis reasonably well. And I understand fundamental analysis reasonably well. I'm self-taught on both. Okay. But I think what a lot of other gurus do is maybe a little bit of smoke and mirrors and maybe a little bit of, I would guess, I don't know them obviously, so I would guess they're doing something that is generally somewhat right. And then some of it might be not quite right. Some of it is a little bit of trickery. But I think they're more different. Like I would say I'm just a trader. I would say I think a professional trader does generally what I do. That's it. Right? I think a professional trader just generally does what I do. And so the other guys, if they do something different from me, then they're the ones that are different. And I don't know what they do, because I've been trading longer than they've been alive. Okay? So I don't know what they do. I don't know what their level of understanding is. They might be incredible at technical analysis and know nothing about fundamentals. Okay? They might be mediocre at technical analysis and know nothing about fundamentals. Right? That kind of stuff. And I've made more mistakes than they have, I'm sure. So I've learned a lot about what not to do. So anyways, I don't think anything I do is special. Okay. But I like sharing the reasoning behind my decisions and the process of getting to those decisions. Okay. You downloaded my templates and you're a MacBook user. I don't know where you... So you have MT4, right? So install it. Just Google it, dude. Go to YouTube. How to install templates on MetaTrader Mac. I mean, it's not hard, man. Come on. Yeah, Hope's like, I think you need both technical and fundamentals. And I've thought that way my entire career. Okay. All right, so let's go through a couple of these. There's a couple of sample trades on this, discussing in the swing trading group, again, levels of aggression and how to manage that through math, really, and proper leverage and stuff. Okay. Okay. So anyways, so in this example, it appears that I might be bullish. Okay. So on a day trade level, I think there was a trade here off the 21. And now off of this time frame, which looks monthly, the monthly buy zone is here. So there's, okay, this and this are still valid. So the bigger question is, at what point do you stop being a bull? Okay. Below this level, below that level. Where's your kill switch? Okay. I think I would still be quite aggressively bullish on this from sort of this area. And if you're down here, I'd probably be neutral until it turned north. Okay? Okay, because we could still do this. Okay? So you have to make these decisions. And so one of the things we talked about, of course, is, do you buy this in Asia? Okay. And when you stop, was it worth the risk? Okay. And do you try it again? So you create a daily plan A and a daily plan B, and maybe by plan C, you're out. Okay. Now, well, I don't want to. So we did a lot of risk management discussion in that group, and I'm not going to get into it here, but you certainly can afford to, 6 trades in a row don't work out, and it's right. It's no big thing. All right, here we are kicking off resistance once again. Is this a day trade? September 5th? No, that's a weekly trade. So maybe let's just switch this for a little bit. Let's go day trading bullish and then drop into a 15. And so in Asia, we had this idea where you could buy it here, expect it to go to 19. Okay. I think at that time, I put it here on the daily M2. Okay. You can see it did not work out. Well, it worked out for a little bit. Hours went by. Now New York has brought it down. So here's the big thing. Where's your kill switch on the daily? Okay, this was a good buy. It didn't work out. This was a good buy. It didn't work out. Are you going to buy here or are you going to stop? Okay, that's it. See? At what point are you no longer a bull? That's what it is. Okay? Your trading strategy that works in a bullish market will not work in a bearish market. So your alpha very much is your ability to understand when that has happened. Okay, it was bullish down here. It was bullish down here. It was bullish down here. Now what? Did you stop? Okay. But the thing is, if you're ashamed of this and you're ashamed of this, you're going to find trading very difficult. You're looking for something that may not exist, and you're misaligning your emotions, and you're going to talk yourself out of good trades and then enter things late and then talk yourself into bad trades. And you're listening to your emotional self. And that is not wise. You're not going to survive if you're thinking emotionally. You must think rationally. Okay? Same thing with kitty cat here. Okay? Cool. Okay? I haven't been trading CAD much lately. I wanted to, just never, it's been a while, just haven't caught it right. But nonetheless, I haven't been selling dollar in this period. I've been out. Okay? And that's non-farm payrolls, right? So I haven't been selling dollar since we were in this area. So it might be interesting if this starts to roll over here, because I do like CAD. I do like Canada. Okay? So I might take that trade, but now I have to decide when. And let's say I throw a trade down here because I say, oh, well, this is the M3, and Wayne's strategy is based on bears selling at M3. But I'd also say that's a bet. You're betting that this falls. You are saying, bet you anything this falls here. Why? Oh, it's the M3. Okay, I've never recommended that, ever. And I've been doing this for 20 years. I've never recommended that once. So now you have to decide, what price action do you want to see before you take it? So what if you see this now? Okay, a reversal pattern at M3? All right, take the shot. If you're a bear on the bias, yeah. Okay? Mohammed says, stop technically, but fundamentally still bullish. Yes. So imagine this. You're Thor Heyerdahl, and you're on a raft called the Kontiki. And you believe, because you've studied it, and it's been known for thousands of years, that there's a current going from Ecuador to the South Pacific. And your raft is here. And you're going nowhere. You're just drifting. Okay, so you've stopped. Technically, you're going nowhere. You're just drifting. But eventually, you're going to catch this current. And when you do, it will carry you. Okay? You got to just keep drifting north until you hit the current, and all of a sudden, boom, you're moving again. So I'm not interested in sitting around, right? I'm interested in where the currents are. And the current, once I find the current will do the work. And every once in a while, maybe the wind counteracts you. So maybe you do catch the current, but on a particular day, on one particular day, there's a little bit of wind. And you don't make much progress at all that particular day. Maybe it's 3-4 days in a row, or maybe there's a storm and it blows you back. You actually move backwards for a couple of days, but then the storm clears, the wind dies down, and there's nothing impeding your progress, and you start moving again towards your destination. That's how I look at it. Okay. Okay, that's how I look at it. So if there's a bit of headwind right now, okay, make sure you stay the course. Now, Thor Heyerdahl knew exactly where he wanted to land, and he actually predicted the exact day he would land on that exact island. He knew exactly where he wanted to go and how he was going to get there, is my point. So if you don't know where you're going or why you're going there, or when you think you're going to achieve progress, then you don't know anything. And of course, you're going to fail. Okay. Thor Heyerdahl was a Norwegian adventurer, ethnographer, wow, with a background in zoology, botany, and geography. Heyerdahl is notable for his Kon-Tiki expedition in 1947, in which he sailed 8,000 kilometers across the Pacific Ocean in a hand-built raft. Yeah. And you think learning how to trade Forex is difficult? How'd you like to make a raft out of trees and rope, the rope you made yourself, and sail 8,000 kilometers across the Pacific Ocean? Yeah. Yeah. And look at the boat, guys. Look at that. I mean, a pretty basic boat. They built it by hand, tied it together. Look at that. Okay? And the amazing thing is he landed on the exact day he predicted. Everybody said it was impossible. Okay? So anyways, he landed on the exact day. So he had to know where the currents were, how to catch the currents. And that's what I've been preaching a long time, for you to understand and be more consistent as a foreign exchange trader. You have to understand the currents of currency. Why do they call it currency? Because it moves like a current. Okay? Cash flow. Money moving. There's currents all around the world of money flowing, and there's a logic, there's a reasoning, there's a nature to it. It moves for natural reasons. So more than just dropping a trade and making 10 pips quick in Forex, I'm trying to teach you these bigger notions of why and how. Okay? Okay? You'll do better. Okay? Okay? So again, one of the things to be testing is we had many reasons to be nervous up here. We'll call that resistance. Okay? We knew this. One of the things we talked about in the swing trading group is not knowing it is way more dangerous. But seeing it, you still have to consider, right? So on Sunday afternoon, we're here. And I said, look, I understand we're nervous. This is obvious. Okay, we saw this, but it's obvious for other reasons too. Okay, I believe monthly and stuff. Okay, but we knew this for sure. And I said, there's a level of healthy respect you need to have for this. And the nervousness is good. It's warranted. It's if you don't know that it's terrible. But have we made a lower low yet? Not when we're here. You understand this? So you can be afraid. You can address it and maybe add smaller lots. Or manage your risk appropriately. Because it hasn't made a lower low, like you bought it here, you made money, bought it here, made money, bought it here, made money, bought it here, made money. You could buy it here. Okay? Now look, 24 hours later, and you're still basically break even. It's not a bad trade, guys. Oh, well, it farted around for 24 hours, and then it collapsed and I got out. Well, that's not a bad trade. You took a shot. It's not embarrassing. Okay? So it's what you do next. And so the next thing we were talking about is that there was a buy zone between this price and that price. Okay? Now I threw down a trade. Again, I was showing you how the auto stop works. But the next part of the conversation will have to do with when do you buy it in the weekly buy zone. The daily set you up and then failed, but that's not shocking. It's only a day trade, for crying out loud. You can't miss a day trade because you're afraid? Oh my God, right? So now what? What point do you hit the kill switch? And then what point do you turn the switch back on? That's much more interesting of a conversation that you were too afraid to do anything. Well, good luck with that. Because I'll tell you, okay, you were afraid here, you were afraid here, you were afraid here, you were afraid here. You're always going to be afraid. Okay? My friend quit the military after, I think, 12 to 15 years of active duty combat because he was no longer afraid. Being afraid is healthy. It keeps you alive. But you can't freeze because you're afraid. You're always going to be under pressure. There's always going to be uncertainty. There's always danger. There's always risk. In fact, you want to make a lot of money, okay? But reward, okay, is a function. No, I guess I have to do it. What? I have to do it this way. Your reward is a function of risk. So this means there's always going to be fear. And the more money you want to make, okay? So you want to buy a Lambo. All right, you're going to have a lot of fear in your life. And you're like, oh, I have no fear. I'm going to make a big bet. That's the problem. You're going to die. As a currency trader, it's terminal. You're like, how long am I going to live, doctor? Hard to say. It could be, you could die tomorrow. It could be next week. You might die in 3 years. We don't, but it's terminal. We're sorry, but it's clear you have no fear. You're going to make a lot of money and then die as a trader, or you're going to lose a lot of money and then die as a trader, but you're going to die. We're really sorry, but there's nothing more we can do because you have no fear. Okay? Fear is always going to be a part of it because you're taking risk. Risk is bad. Okay? So again, right? If you're going to train yourself to buy on the 21, for example, and you're sitting on the 21, you have to buy it. Yes, there's risk there. Well, then address it. Maybe cut your lot size in half or keep your stop closer. Or more importantly, If it makes a lower low, what do you do next? Okay. So anyways, get in the game. Okay. And now bears, check this out. You ready, bears? That's what a bear will do. Okay. Oh, look, I already got a line there. Cool. Okay. Just remember, you're buying on the way up, not on the way down. Buying on the way up, not on the way down. You get that squared away, you'll do fine. If you have the patience, well, first of all, discipline not to buy on the way down, and the patience wait for it to give you a real opportunity. Peace on earth. May the pips be with you. May our profits be above average. Remember, visit tradersway.com. Open up a demo account today. I will see you tomorrow. Thank you for being here. Cheers.